Hello, my name is Jenan Kanono. I'm the team leader at Jonoki Holdings Limited, where we get to serve you. So if you have a financial challenge, if you have a money problem, if you want to scale up your business, we have you sorted. And you can always check us out at www.jonokiholdings.com for money solutions. We are located in Tinda as our headquarters and at Mulago Business Center as our branch. Enjoy this video. Our today's topic, as usual, is the general perception of money lending in Uganda. What is the general perception of money lending in Uganda? And this has two ends. The first end is that wherever there is a borrower, there should be a lender. But we need to tap on both ends. What is the perception of the borrower towards the lender in Uganda in the money lending climate? And what is the perception of the lender towards the borrower, which covers up the whole picture of the general public? So the general perception, just to give you a bit of statistics, is that over 53% of our population, that's about 21 million, subscribe to mobile money services. They have mobile phones, they have mobile money lines, and they use mobile money services. Out of that, we only have 4 million people who use banks. Now, if you use the statement that much of the population is not bankable, that they do not have bank accounts, you're actually right. Why? Because it's a small fraction. That's about 10% of the population, which is too small. So why I give this background is to show you the picture of what informs some of the perceptions about money lending in Uganda. Now, they are both positive and negative perceptions, and it is important that as a lender or as a borrower, you get to understand and know that amidst your perceptions, if you lean on the facts, you could actually, disempower or disbank your perceptions, because some of them could hold no data, or some of them could hold no water. So meaning that they could not be true to some extent. I'll start with the positive perceptions. The first perception is that lenders lend money faster. So that is convenience and speed. So by the time someone comes to a money lender, generally they know that the bank is going to tell them to come after 1 week or 2 weeks or 1 month. We have even seen loans that have taken as much as 3 months or 6 months. Someone is processing a loan facility for 3 months. Now, for Christ's sake, if I am importing a consignment from a particular country and it's the border post, and probably URA in the warehouses, they are charging probably $1,000 per day, it is not anywhere commensurate to getting money from a money lender, and you clear that consignment, you make your sales, and come and actually pay. So if you're in the lending business and you're not trading on the speed, then you're almost becoming a bank, which distests your service, which is a disincentive to you as a lender. But also for the borrower, they expect you that by the time they come to you as the borrowers, they expect speed. So you have to trade convenience and speed versus compromising on your procedures, because you also as a lender have to have procedures. There could be a loop that the fraudsters can actually use. They have never used it on us. These guys come on Friday afternoon, he wants 100 million, and he puts in a lot of speed, and probably the collateral that he has is land title. So there are lots of tragedies in there, in the detail, that I might not even be able to explain on this video. Because, first of all, land is a very hard thing to search, verify facts, ownership, leave alone value, open boundaries. And someone comes in the afternoon and expects money that very day or that very afternoon. And it's a Friday, because some of the transactions involve government. And government institutions probably, they are coming towards the weekend, and it's fast-paced. So those are some of the indicators that fraudsters can take advantage of. But ideally, as a lender, you ought to trade against convenience and speed. Outside that, you actually might suffer. But also the general public perception is such that you should actually serve them with speed and a lot of convenience. But also, too, is economic empowerment. Just like I gave you the statistic for the population which is bankable, or the whole bank accounts, about 10% of the population, that means a huge number of the population do not have bank accounts. So you do not expect them to actually even get credit from the banks. Why? Because the first requirement for you to get credit from the bank is that you should have a bank account. So if you do not have a bank account, for starters, you have knocked yourself out. So you can imagine the population that is left not attended to. And it's relevant then that the money lenders exist. Look, money lenders will exist in Uganda, they will exist in the entire world today, tomorrow, and forever. Why? Because not everyone in the population is actually banked. Not every person in the population is actually having a bank account. And not everyone actually qualifies for a loan, because there's a lot of scrutiny that goes on in the bank that might not even necessarily should be happening, because sometimes someone qualifies for the money and there are a few details they could not be having. So money lenders exist. The general perception is such that you exist for economic empowerment. And this speaks even, if you're lending, what's the background? What do you have in mind? Are you intending to empower that person? Now, to this, I'll speak to the interest rates. Surely, if you're lending at 30%, 25%, 20%, 15%, honestly, is that an empowerment? Are you looking at this person walking a journey with him or her, growing with them, creating a relationship with them? So ultimately, if you're a lender and you're still lending at 25, 30, above 20%, or even 15, if they gave you that money, would you actually invest it and have returns? So it is important that as a lender also, you revise your interest rate so that you make it affordable for the borrowers, because ultimately it's about relationship. The climate is getting very busier. The climate is getting very, very congested. So the borrowers will have the liberty of selecting who to buy from or who to borrow from. And the high interest rate might be disincentive to you as a lender. So it is actually high time. It is actually high time that you revise your interest rates downwards as you grow, because ultimately you're in the service of creating relationship, but also in the service of having as less defaults as possible. Because if you do not, then you will catch with almost every client. Because I kid you not, there are very few businesses that will give you as high as that return. 15%, 20% per month is really, it's a high return. It's a high return. That even if I'm in a fix, I'll come for that money, but well knowing that, I might actually, default. So it is important that as a lender, just as the perception of the borrower is that as a lender, you also tone down in terms of interest rates. Of course, it's at your discretion, but it's important that you tone down on interest rates, because then you'll have huge defaults. As a matter of fact, in this industry, there are a few guys that I work the journey with. I run masterminds, but I also mentor some of the lenders. And you actually look at someone's logbook. Yes, they are lending at 20%. Yes, they are lending at 25%. But when you look at their loan book, the default rate alone, the number of loans and the amount of money in default actually qualifies them to lend at 4%. You find someone is actually lending at 3 or 4% per month, but for him he thinks he's lending at 25. Why? Because the default rate is high. So I'd rather you actually lend at a lower rate and you have a very little or small default rate than lend at intuitively high rate and yet the default rate is high. And before you know it, you're actually indirectly lending at a way lower rate than you'd even have lent at had you organized yourself and worked on your numbers. So it is important to know that we are in the business of relationship, both to the borrower but also as a lender, because you intend to grow with the borrower. I've seen guys that have borrowed 5 million starter, and they go to 10 million, they go to 50 million, they go to 100 million. You walk the journey with the client. So that should be the mind of the lender, and it's a perception of the borrower. Now, the last one, probably let me dash to the negative implications. Now, amidst the positive ones, there are negative sentiments about money lenders. The first one is that high interest rates. The assumption from the public is such that the lenders, lend at high rates. Sometimes it's not the case, because there are those lenders who lend at an affordable rate, and their intention is to walk with you the journey. So you have to debunk some of those statements, because you have to be comparative. Look, if you go to the supermarket or if you go to any market, you are at liberty to compare different prices for different products. So as the borrower, you also have the liberty to take stock of the lenders and know whom to borrow from and whom not to borrow from. Because there are also some practices that were existent. Of course, they are also still existent now. The practices which are disincentive to the borrower. Someone, lends you money when you don't even have the financial cash flows to pay the loan. But because you have the collateral that is worth probably 500 million, he affords to give you 100 million. But the biggest money you've ever banked on your account is probably 5 million. And probably the property was left with you by your father. And the guy lends with an intention to defraud your property. So such guys also existent in the market. So as a borrower, if you have a perception that every lender is in that category, wanting to to malice you and take your property, then it's not a common practice. That predatory lending practice, it does not apply to everyone. There are those lenders who are genuinely lending money. And I must say that even Jonaki Holdings Limited, we are intentional about creating relationship, work with you journey. The final one, as my time is first spent, is lack of regulation. Now, people have a perception, the general public have a perception that money lending industry is not regulated. That's not right, because we have the Tier 4 Microfinance and Money Lenders Act of 2016. So you have an act. We have the attendant regulations of 2018. So we have the laws that regulate us. So their perception that when the money lender, when the time comes to pay, they hide. Those things are not grounded. They are far-fetched. They are no longer existing in the 21st century. Why? Because the act gives you the liberty. The regulations give you the liberty to even go and bank the money with the regulator, Uganda Microfinance Regulatory Authority. So if you so come to pay the money and someone hides, you have that liberty. But also you need to verify as a borrower that does this person have a license? Are they looking at this business for a long haul? Or are they in this thing for a short while just to make ends meet? So it's important that you debunk some of the facts so that you can build your trust and know that at a certain point you will need credit. Because just like blood is to the body, so is credit sometimes to business. When you need credit, you actually need credit. There's no around it. So it is high time that took your time to learn, interest yourself, to debunk some of the facts that you thought were facts, and yet they're not grounded, and they cease to be facts. So I thought I'd highlight such things that you get grounded, so that by the time you borrow, or by the time you lend, if you're a lender, you have a good picture of what it is, perception that are existent in the public, so that you can fully do your work and do it very well. Because ultimately, we have to grow together. Because ultimately, we have to build trust with the people we borrow from. You don't hip hop from this one to the other one to the other one to the other one. Have that intentionality. Because at the end of the day, you may need someone's hand, both on the end of the borrower as well as on the end of the lender. So thank you so much for watching this. I hope you learn 2-3 things, and above all, especially for the lenders, implement. But even for the borrowers, acquaint yourself with this knowledge, because you'll get to benefit of it today or tomorrow or the other time, because you don't know when time comes when you actually need credit. So this might come in handy. So thank you for watching. Subscribe, comment, like, but also check us out at www.jonakiholdings.com. And God bless you. See you in my next YouTube shoot. Thank you so much.